30th of August 2023, Wednesday, MAO with Cal. The JOLTS jobs opening drops below 9 million. What does it mean? Big problem, guys. This is actually happening because when you see these numbers coming down, that means that unemployment is actually probably going to go up. And because now the confidence are shaken, this is where things will get very dicey. And now I'll share you more in details. Let's go. All right, disclaimer apply as usual. And thank you, AIMS, for the kind sponsorship. All right, so let's take a look right here now, guys. Look at the consumer confidence. Now, the forecast was 116. Now, to note, this number was supposed to be higher than the last previous number, but it came out to be 106.1. That is a full 10 point below. So is it because people are getting worried right now? So this is one good reason to be watching out for. And of course, the JOLTS, the jobs opening. Now, we know that this number has been staying above the 10 million mark for quite a while, and yet it has dropped to 8.8 million. So let's take a look at the charts here. You can see that the JOLTS, right, is always been between the 10 to the 11 million jobs, but recently it has dropped all the way down. This is not a good sign. That means that the companies are not really employing people, right? This is something to be worried about. And of course, the consumer confidence, well, we have a roaring success recently, but now it has dropped quite a fair bit. Again, this is all the good reason why we should be careful. But I understand why now the stock market is going up. I'll tell you what's the reason. Now, because of this JOLTS, right, and this is happening, so people are now watching on this right now. They feel that right now, right, because of the jobs opening going down, that means that inflation will come down. I mean, seriously, come on, guys. Because we all know that Jerome Powell's point of reducing inflation is because they couldn't have this allowed. But the thing is that the point is this, for the academic point, is that it says that if, let's say, there's a lot of people in the market right now working, hence therefore inflation can come down. So the only way to basically curb inflation is to reduce people involved in the job market. But this is silly, because if you do that, that means that the recession or the economy will get into some issues. So we can see very clearly right now, the job openings has fell quite a fair bit from 12 million to 8.83 million. All right. And of course, right, this actually shows that the people who are quitting itself is actually increasing. And of course, the opening rate is so much lower, and the hiring rate is not really performing. So which means that this whole thing here explains that the economy is having issue. And of course, if the labor market is coming down, naturally, the next thing will happen will be GDP. And then the next thing will happen will definitely be a potential recession. And that's my point here. So if you look at it here right now, because of this data, the interest rate supposed to go higher has now become status quo. Which means right now, right, they are expecting that there'll be no interest rate hiking for this month, I mean, coming September month. Now, it was at 78% just one day ago, but once the job data came out, apparently it went up to 87.5. That means that they're expecting Jerome Powell and friends to do status quo for this coming September. Now, I totally disagree. I really think that Jerome Powell must hike interest rate right now, because if they still continue to kick the can down the alley, this will definitely create more problem later. So my view is that they must hike, but the market, Wall Street, doesn't think so. So because of that, right, immediately there are benefits going on. So we can see that the Texas manufacturing activity has weakened and employment has grown much lower. So that is the repercussion of the high interest rate right now. But because everyone is focusing on no interest rate, right? So you can see that immediately the dollar came off, because if you high interest rate, the dollar would naturally go up. So over the last few months, the dollar have been strengthening. Is because, all right, because of the last few weeks, sorry, is because of the talk about having more interest rate, right? But suddenly, because of the JOLTS right now, that's why the dollar came off, all right? Because there's no interest rate hiking, then the dollar will take some profit. So that is why the dollar comes off, and there's reason why you saw gold yesterday going up, you saw Bitcoin flying up yesterday. So all these are the aftermath. And of course, with the dollar coming down, you will expect this will happen. The 10-year yield also came off, all right? Now, the 10-year came off, there were two reasons. One is the US dollar. The other one is because apparently the 7-year treasury auction have basically attracted a lot of people buying. Now, the only question is this: who is these people buying? Doesn't it know that the treasury will still fall? So the question mark is, it could be actually done by internally. It could be the Federal Reserve. It could be someone in the authorities or stuff like that. So we're not too sure what happened, but the auction was good. So that again pressured the 10-year yield lower. Okay, and of course the yield going down the dollar coming off, who will benefit? Of course, the NASDAQ will benefit. So that's the reason why the NASDAQ went up by almost 2.2% last night, and it breached past by MA30. So this actually shows that the upside can continue right now, because MA30 is a very good short-term moving average. If the market stays above that, the buying will continue. Yeah, so watch out for this. So with the Nasdaq going up, right, undeniable, Tesla definitely. Now, last few days, Tesla from the height here itself, about 300, has fallen all the way to about 210. That's down by almost 10%. It's $30, so down by 30%. Then it rebounded strongly. But the thing is this, the high is about 257. So if you do the maths here, if this is 300 and this is 210, right, the midpoint will be 255. So we're somewhere around here, right? So we are now exactly at the midpoint. So if the Tesla can go higher, it has to reach 265 to go back up again. But if 255 become a technical resistance, then a pullback down to 224, 225 is actually very, very possible. So traders, you need to watch out for this. Now, apart than Tesla, with Apple. Now, Apple have came down, same thing. It have came down quite a fair bit. It was at about 197. And it traveled all the way down to near the moving average of 173. Now, the thing is Apple went up because there is an ongoing speculation that iPhone 15 is coming out and there's a lot of new features. So people are buying in anticipation of this. Now, usually Apple will have a new launch in September. So seemingly they are trying their best to do it. But again, the market respond now to a new iPhone or new smartphone itself is actually coming down at the moment. So we will see how it goes. By the moment, like you can see right now, it had a stable 183 level. If the market loses 183, then that will see again a selling back again to 174, 175. And would that drag down the index? Definitely, it will drag down both the Dow and the NASDAQ. And of course, the one that's charging all the way up is NVIDIA. Now, we call for sell on NVIDIA. This is a weekly chart, by the way, was somewhere around here, and the NVIDIA price came down. So from 490 around the area, it came down to about 390, about 395 area, all right? So not bad, it's $100 run, but again, within 3 weeks, they have basically recovered everything, and the volume is not small, yeah? So there's a lot of upgrades right now for NVIDIA to, let's say, 700, 800, 900, 1,000. Now, all these are, to me, itself, right? If you can predict some stock will go up by 1/4, then you should be going all in to do that. So to me, it's always a laugh, but again, we just have to see for it. Who knows, NVIDIA is the next Tesla who went crazy back then. All right. So the thing is this, oops, there's a technical issue here. The Dow Jones itself right now is trying to go up. And the thing is this, we all know that the Wilshire 5000 price index, you can see is now at higher level than compared to the job opening. But if you look at it, the job opening and the Wilshire 5000 price index, they go in tandem. So now what we're having is a job opening coming down, but the Wilshire 5000 price is not really coming down. So one of them is not telling the truth. So if you ask me, it's just a matter of time, we'll see the Wilshire 5000 coming down to join the job opening, and the job opening is expected to go down lower. So let us see whether I'll be right. But now it's pretty clear that we are now kind of overbought versus what people say is actually just nice to buy. All right, so the conference board right index dropped to 106 this last month, and this basically means that right there is a potential reflection of people getting worried for right now. And of course, inflation has moved to about 5.8, although the CPI data is saying that it's 3%, but we all know that if we include all the gasoline prices, the groceries and stuff, this is much, much higher. So you can see that the consumer sentiment versus the consumer price index, right? You can see that when the consumer sentiment is positive, it means that if they are very happy what they're seeing right now, you can see that the consumer price index is going down. Because why? Only when the price is coming down, people enjoy this, yeah? So now we can see that we are having the same problem here, where the CPI is coming down right now, but interestingly, it's that the consumer is actually recovering. So a bit of mixed bag here. One moment they are looking at the sell, but they're also looking at the confidence to be down. But on this side itself, we compare, it's again a different thing. So all I can tell you is that if, let's say, the consumer prices continue to fall, right, the next thing is that the sentiment must stay alive. But if the sentiment also fall, that means that the market is really very worried right now. And of course, if you look at it, this is the current new orders versus the 4 weeks moving average of the initial claims. So you can see very clearly that whenever the Federal Reserve district new orders coming down, right? The initial claim goes up. Why? Because people don't have money. They need to get, they may be facing bankruptcy, so they need help, right? And of course, if they need help itself, right, you don't expect them to do new orders. So now the new orders, you can see right now is coming down. This went down below negative for a period of time. So which means that right now, right, the initial jobless claim should be able to go up very soon, because a lot of them itself, the data is about 2 months to 3 months delay, so they cannot reflect the exact thing. But of course, as they if you ask any Americans right now, they will feel that they'll tell you that this is not the best time to invest in stock, because they really have no time or no money to even have put food on the table. So this is one very scary part. So the last one to see this 5%, the 5% of all-time high. You can see right now that was what happened. Let me show to you. The high recently came in back in October 2021. Then of course the 5% rule kicked in and the market really came down below the 80% mark. But of course, we all know that 80% mark is a bad territory. The Federal Reserve came in to save the day back then and pump in so much money into the system and buoyant the market all the way now to here. But the thing is this, guys, there's a very interesting phenomenon right now as I'm speaking to you. There's a moving average right now that's very, very near to us, all right, and if this is to us in China, so if this is going to be an issue, right, then traders need to be very careful. Let me show you the chart right now so that you can actually see for yourself. You can see very clearly that the market is trying to stay afloat above the MA30. So if the market stays above MA30, it can go all the way to 35,105, because that is where the resistance is. Previously, the market has found as a resistance support, but once the market broke below it, you can see the selling is torrid, right? So for the time being now, I'm basically keeping my finger crossed. I'm basically expecting the market to come back down lower to this white candle area, but of course, the upside could be as high as 35,105 area. Now, for the 5% rule, you can see this. Now, you can see over here as well, when the market basically stabilizes and stay above the moving average and above the 5%, which is at then 90%, the market steadily bounces off the MA30 and then reach this point. Okay, so what we can say is this. Now the market is staying above the 90%, so we see how the thing goes. If it's going to be a white swan, it will stay above the 95% and I can visit you as one. But of course, if the market stays below the MA30, then of course selling is still expected to come, and we can see as low as you can see here about 32,258. So your view on this, let me know in the comment box, right? But to me itself, as long as it stays above MA30, I think the market will really test the 35,105 mark. Unless there's something very negative, then you'll pull back all the way to what I just said, this 33,258. All right. So guys, that will be all for today. Thank you for listening. I really appreciate that. So all I can say is, guys, you need to be very careful. Although the market has been going up the last few days because of the interest rate fear getting lesser, but I believe that, right, the technical shows that this market can't stay up for too long. Okay, so be careful. Right, this is Cal signing off. Take care, like and subscribe and share this video. Bye-bye.